There we are.
Could you hear that?
Yeah, that's cool.
I was just shredding some very important documents.
Oh yeah, so authorities don't come for you.
That's no, it really is, Jimmy. I still print stuff out to read it.
Yeah.
And then I don't want people to realize that I don't want to read on my screen. I almost said I'm too old, which I'm clearly not.
Clearly not.
Then I shred the stuff so nobody finds it and comes in and goes, "You still print shit out?"
Anyway, welcome to Tradier's, the Trader's Edge podcast. I'm Jim Uriel. That's Bob Iacino. So, Bobby, the stock market rally seemed to peter out over the last few days and traded sideways. What are your thoughts, equity market throughout the end of the year?
You know, looking at it, the NASDAQ specifically is rolling over in a way that kind of gives you the idea that it's going to continue. You know, we know that when lower lows are made, that's generally a trend. But it's gone so far that in order to kind of come back and correct to the point where people would say, wow, this is going to get a lot worse, and that's a lot of work that needs to be done.
Yeah, I understand that too. Okay, last thing before we bring our guest in. On December 3rd, the Sunday night, gold shot through the roof, rallied $90, was up 4.5%. Bitcoin rallied $3,000, up 7%. Just in the first hour of the trading session on Sunday night, it felt like a panic, or it felt like just a short covering rally. What are your interpretations of it?
I think given the situation with Bitcoin and the way it's been rallying, and given that gold hadn't broken out above those levels in basically forever, I think it was just kind of a piling on. I don't necessarily think it was new longs. I think it was short covering. You've mentioned that in other shows, and I think you were right about that. I actually think the more impressive thing to me is the crude oil sell-off than that, because the gold reversed back down and is now stabilized, and now we can try and potentially put on some new positions. So just kind of looking at those three things together. Should we bring on Emma?
Shit.
What happened? You can't
hear us.
Me? Bring on him. I can hear. So here's why I hope. I was hoping you still couldn't hear, so I could explain to Emma why I don't agree that you should be higher on that picture. I know I do it every time.
No, because I obviously should be higher.
Insidious is what it is.
I searched Futures Edge on YouTube, and I see this with Jim, this with Jim, this and that with Jim, and I'm like, everything's with Jim. Got it.
You gotta get the pretty face up front.
By the way, I got a question for you guys real quick. Do I keep freezing up to you guys or no?
During that little intro when you said, "Oh shit," you were still active.
Yeah.
Oh, we're very professional.
Up to me. But anyway, we have one of our good friends, Emma Muhleman, who is a macroeconomist, portfolio manager, frequent guest on Fox, frequent guest on CNBC. She's everywhere. She's awesome. She's our good friend. Thank you so much for coming, Emma. How are you?
Great. How are you?
I'm not bad. Bobby might have to be conducting a little more of this interview. I thought I had an excellent internet hookup here. I'm hardwired in, and you guys keep freezing up to me. But let's go right to it. I don't know if you heard what we were talking about in the intro. One of the things I've been rallying about is the move in gold and the move in Bitcoin on December 3rd. Implicit in my question is going to be, I believe that the market is worried about debt crisis. Seems like too much of an exaggeration. I don't think crisis is the right way to say it, but you did see those auctions where people weren't really lining up to buy any duration from the U.S. Treasury. Are these things connected? Is gold and Bitcoin going to the moon? What are your thoughts?
I think they're connected in a slight way, but not in the way you were talking about what happened on the first hour on Sunday. I mean, on Monday morning. So I think there's definitely people are realizing that the U.S. deficits are unsustainable and our debt levels are unsustainable. And so that's giving fuel to things like gold and Bitcoin to some extent. But I don't think directly on that rally, like the supply, on that auction, the supply demand that day where we had the bad 30-year auction, I don't know that was the factor that drove it as well. What do you think, Bobby?
You think that was just short covering rally?
Well, I think there was something with ICBC where, and I think it could have been intended by the Chinese, but they're a huge buyer at those auctions. And so that's just a thought in my head. I don't really know. And I just, the way that 30-year auction went and then it reversed and kind of it doesn't look like it was anything like where real money investors were like, get out of the U.S. debt because it's going to, collapse. It did seem like that to me, but.
Yeah, that's the strange thing about that move. Whenever I see a move like that that reverses as quickly as that one did, just from a trading perspective, and again, for everybody that's watching, my average hold time is about 24 days. So I think I pretty much fit into a trader realm as opposed to an investor when I'm talking about these kind of things. But when I saw that, I've been long gold all year. And when I saw that, it didn't say much to me either way, to be honest. You know, this goes back to a while back, and Jimmy and I, you've talked about this, you know, when CNBC asked me to talk about copper when it was up 7%. And I said, no, because it doesn't mean anything to me. You know, when you see a move that extravagant, and the fact that it kind of is bouncing a little bit today, gold specifically, I want to see gold hold here more than I would have liked to see it extend that move. So I agree. And Jimmy, you've mentioned this. We always go to short covering when you see a move like that. And I think that's legitimate because, as Emma said, it doesn't seem to be like real money investors getting involved in moves like that.
But what about, so Emma, about to you, what about the move in Bitcoin? And I don't know how close you look at Bitcoin. Every time over the last year, it seems like it rallies maybe on a rumor that there's going to be approval of the ETF. But then the rumor's denied and it stays bid. Or this one, it rallied on that Sunday night, gold reversed, Bitcoin didn't. What are your thoughts on that?
So you definitely have a point there. And I think Bitcoin's actually, so I was on a Spaces, and there's a big Bitcoin gent that has some 1 million followers or something like that on Twitter. And he's a reasonable thinker as well. And he kind of showed me some charts and got me seeing how Bitcoin is really no longer like just correlated with, GameStop and meme equities and rallies in the memes type stocks. It's gotten an actual negative correlation or uncorrelation. Really is trying to make the case of, because I was like, if it's actually uncorrelated, every advisor and their mom and their dog will be trying to buy this and put it in client portfolios. But it looks to me like it's going that way, and maybe perhaps that does have to do with the unsustainability of our debt and then our various geopolitical misadventures, or however you wish to
misadventures.
So let me ask you then, and this actually popped in my head as you were speaking, because my 3 things against Bitcoin, and I do own it, and I've owned it, and I've traded in and out of it. My big thing against Bitcoin has been threefold. Number one, the government can always make it illegal. And I was on a space with you once talking about that with somebody, and somebody kind of came at me about it, and they still didn't convince me that the government can't just say, you can't transact in this. Because at the end of the day, it comes down to whether you can pay your taxes with it, right? And again, tell me if I'm wrong. But number 2, the ETF story, right? We saw BlackRock list their ETF product. It's not tradable yet, but it's listed. And then it goes to that whole thing of like BlackRock runs everything. So if they were confident enough to list it, then it's going to be approved, right? But then the third thing, Jamie Dimon today, did you see him? He's like, he said, and I'm paraphrasing, he said something in effect, Jimmy, why don't you guys just get rid of it already?
Oh, he said this. If I were in control, if I were in your guys' shoes, I would ban it all and make it
ban it. So the third part of it to me, we still don't have clarity on what regulations on Bitcoin will look like if they come about at all. So what part of that makes sense, and what part am I an idiot?
I think it all makes sense.
I thought she was going to say, I think you're all an idiot.
That's why
I think you're all an idiot.
I could never be like, one of the, Bitcoin maximalist, because I do see value in the fact that it could potentially be an inflation hedge. So I do own a little bit, like 5% type of deal, but I can't like be like, yes, this Bitcoin thing, go buy it. The value is great. It doesn't consume tons of electricity, and it's not like, so I think, and there's huge risks like that, and I typically don't like asymmetric, like binary type events, like banning things.
Yeah. Well, no, that is interesting, because what you just hit on is something so emotional about Bitcoin to so many, the crazy diamond hand hodlers. So there's like this, the crazy people, and then people like us who are reasonable and logical. Like, I have a decent amount of Bitcoin. Didn't start out as a decent amount of Bitcoin, but it's rallied quite a bit. So now I actually have to worry about it. I don't want to sell it because I don't want any sort of tax consequences. But I think when BlackRock, Bobby said, when BlackRock gets behind something, if you believe what I believe, that they really are the puppeteers, then it's a big deal, isn't it?
Are they really the puppeteers though? I don't know. I really don't know.
Well, then trust me, they are.
Okay. Okay.
Well, that's one of
there's
those things that it's one of
I
those
mean, they
things
just want
that,
to make money, right?
no, go ahead, Emma.
No, you go.
What I was going to say, it's one of those things that Thomas Sowell in his book, Economic Facts and Fallacies, the opening of the book, he says some things are facts because they're demonstrably true. Other things are supposed to be facts because they're repeated loudly over and over and over again. And that seems to be like I take the BlackRock thing as fact, but I don't see it as a demonstrable fact. I don't have any evidence of it.
Yeah, I mean,
Well, I
were
would say,
BlackRock,
I mean, they control, how do I say it? They own a lot of businesses. They have supported a lot of politicians. The moment they said they were applying for a Bitcoin ETF, my belief was that, hell yeah, they're going to get the Bitcoin ETF. Of course they are. They're BlackRock. The politicians that are voting on it in the SEC are somehow connected to them. Am I going to get killed for saying that?
of course not. But is it correct that they actually have enough influence to control things?
So where do you fall in that ETF thing before we go on to stuff that
But on
actually?
the ETF, it's at this stage, it's got to be somewhat priced in. No, I mean, but I have in the past overestimated the market's, application and use of information, and said, oh, the market's got to have priced this in, and then been shocked. So.
Well, that's kind of the critical part, right? I mean, I've said that once they all get approval, we're probably going to see a little bit of mean reversion on Bitcoin specifically. I don't know that it goes back down to 19,000. As a matter of fact, I doubt it does. But is there a function within the ETF world where once these things are approved, that all of a sudden people have to say, well, I got to be in it now because there's an ETF? Is that a technical function or more of an emotional one?
I mean, there are for other different types of ETFs, but not a Bitcoin ETF. Like, I don't think there's pension funds that have a mandate that if a Bitcoin ETF is created, they automatically have to be buying the X percentage of their assets in that. That would be really obnoxious to the portfolio manager. I'll tell you that for sure. I've worked for a, not an ETF, but a mutual fund once.
Connections. You guys just keep it up.
He thinks we can't hear him again, but we can.
I know,
but I'm going to switch to another computer so I can hear you guys. I heard that, but we'll see.
This is a live show, by the way. We're so great at this. Go ahead.
And we'll just have the editors kind of, oh, wait, it's live.
He's gone.
And that's what I wanted to warn you guys about. There's an infant behind me, and so I'm going on hope that she doesn't her head doesn't start like turning all 360 and red. And if that happens,
we kind of hope it does.
It'll be pretty epic. If you get me,
we kind of hope she does.
It'd be appropriate.
So I've actually got a couple questions, or one question for you already from Max Zam that we're going to put up on the screen.
Sure.
And I'm assuming this for Emma. What do you guys think about Vivek's Strive as a counterpoint to BlackRock? Vivek Ramaswamy.
I mean, I love him, but I'm not going to say his wrong, so I don't really want to say it. Vivek. I think he's great.
Vivek.
What?
His name's Vivek, I think.
Max, can you hear me?
Yeah. Hey, Max, can you take Jimmy out until he's set up? There we go. So you were saying about Strive.
About Strive? I don't know what Strive is.
Strive is actually his asset management company that he set up prior to his presidential run to compete with BlackRock. Actually, so I've met him. I've been to a couple of his supporters. We had him on the podcast.
I know.
Yeah. And there's a tiny part of me that thinks the presidential run has to do with Strive. I don't know, because it's a pretty long shot that he gets. I mean, I love the guy.
Ask him about that when he was on the podcast. I watched it, but maybe I didn't watch the whole thing. You guys did ask tough questions, I got to say. And I was on the podcast, I think, the week before that. And I told you guys, I was like, I love this guy. Like, nobody's talking about it yet. There was no debate yet. After that first debate, it was epic. I was like, good job.
Yeah.
But I think he was smart. But I'm like, I don't know about like domestic politics. I mean, I should know more, but since I'm an international investor, I got to focus somewhere, and it's mostly not on like tit for tat USPS.
Right,
you know what I mean? Identities and whatever. Just have I'll find out when the end comes.
Yeah.
But I thought I was thinking. So I'm just thinking of like an average American, watching the debate, going, I think maybe he was smart to be the only one who would defend Trump along the way, because Trump's got, and then he could get perhaps a vice take it. So that's yeah.
I
And so then I
totally
think some
agree.
other people are like, man, I wish I would have taken his approach, but he's very bright. I mean, long after this is over, I'm going to be studying those videos. And that guy is,
Yeah.
impressive.
I mean, not to get too much into politics on this show, we can do that on the other show, but I don't know why he, like, the entire right, harsh or otherwise, should get into, like, should back him, because he's everything you want, including the Trumpian parts of him if you're a Trump supporter, but whatever. I want to ask you about something that you put up on Twitter. We both follow somebody whose name it's not his handle, and I don't think it's his real name, but he's up there as Walter Bloomberg. And I think his Twitter handle is like @Diatore or something like that. What is it?
Delta One, I thought.
It's something like, maybe I'm reading it like an Italian. I said @Diatore.
Yes, I think so. I think it's Delta One.
So he's just a journalist. He just puts headlines out. One time I asked him, one time he put something out about a year and a half ago, and I go, "Where'd you get that information from?" He's like, I'm in the press conference." Like, oh, okay, sorry. I thought he was just some other idiot, but he's actually a real journalist in the EU. But he put a headline up that says, "Yellen said soft landing skeptics are now eating their words." And our dear Emma replied, "Bah ha ha ha. Could never imagine this coming from that lady's mouth. Soft landing is a crock and an oxymoron used by/for investors who want to avoid the realities of the business cycle. Just as a heroin addict can't avoid the come down by doubling the dose indefinitely, we can't avoid the business cycle by papering it over with endless fiscal spending."
You wrote that off the cuff, Emma. That's freaking brilliant.
It's brilliant. I just want you to have a dialogue, to have a, what do they call it, a monologue on that, because I love that.
Well, first thing that sets me off is this Janet Yellen, because I remember when she was the head of the Fed and listening to her over and over. I would write on LinkedIn like a prediction of her speech, and it would be like word for word exactly what she said. And then she would say, "The economy's great, employment's great, everything's freaking great, and we're gonna keep rates to 0%." And so I'd like literally just get so irritated. I'd be like, "This one, so start that with that," and then her saying that what was the term she used that shocked me, that I was laughing about?
Those who don't believe in a soft landing are eating their words, as if it's
eating
done.
their words. Yeah, they're eating their words. That's funny. Just come to think about Janet Yellen saying that. Like, it's like me saying, or it's like, I don't know, Powell saying we're gonna mop the floor with Xi Jinping or something. I don't know. Like,
it almost is like a deep fake. The idea of her doing it.
Exactly, and then the main point being, to me, a soft landing is like a construct made by just kind of like the idea of the neutral rate of interest. Like, I get what the idea is here, but like, we can't measure that. We never will be able to know what exactly the real R star is. And Powell has admitted that in the past. So he's been like, let's stop like obsessing over this R star. Just like when people say, oh, so we are getting a soft landing, it's just like an excuse to be bullish, if you ask me. I mean, eventually you're going to have to, if you have a bunch of positive sentiment and momentum flows and the market's just running up despite anything that happens in the background, you're going to have to come to terms with that, and the system has to cleanse itself and detox and get rid of all the nastier parts that build up.
So Emma, the last two employment numbers we've seen this week, the JOLTS number, and we realize that the net number of the JOLTS is bullshit, but the direction seems important, as told to us by our good friend Mike Singleton, and it's trending down pretty fast. The ADP number comes out today. It's kind of a shitty number. Revision was bad as well. The market now is pricing in over 100 basis points of easing in 2024. Bobby and I have a wager on when the first easing comes. When does the first easing come? When does recession come? What are your thoughts?
All right, so the market's betting the 80% or something like that odds in March. I don't think so.
Okay.
I'm betting against.
So do you want a dollar bet as well?
Do I want to?
Don't you kind of do that for a living?
Exactly right.
Maybe one day. See, if I were going to do it, I'd do okay, maybe one time by December next year, and I'll bet a very small amount of money. I mean, I don't think that. I think that the market, like, every time I see Powell speak, except for the latest one, I got his dovish tone, or relatively dovish tone at the latest one, but it didn't tell me, oh, I'm going to cut a bunch, like price in cuts, like increase those. Oh, I'm going to be cutting like ASAP, like next, March. Like to me, I always come away going like, did we watch the same conference? So to me, he still seems more hawkish than the market expects, and it has priced in. So.
Okay, well, when you saw 10 years in how many weeks go from 5% to 4.15% today? I personally, Bobby and I talked about this earlier today or yesterday. I think a lot of it was a short covering rally in bonds. I think eventually the curve is going to steepen because I foresee him cutting rates, which is disagrees with you, and I'm fine with that. But I also foresee the long end having higher yields because of just the massive amount of issuance that's happening. I have a steepening trade on. What do you think of that trade?
Well, what do you think at the auction next week that Janet Yellen will do in terms of the mix-up of bills and longer term?
Last time she had a refunding announcement, she was conspicuously short of long end, which I thought was interesting because if she doesn't have the confidence that the demand's out there, isn't that something that should be a little more scary than we are treating?
Yeah, I mean, yeah, it is scary. I mean, and I know you've been like trying to get this answer for a long time, so I'm giving it to you. From Nancy too. Like I was watching you guys with Nancy, and I answered out loud to myself when you were asking her the question. I was like, "If that's what you want it to be." She didn't give you that. I was like, "That's too funny." I mean, yeah, no. I mean, if Yellen herself is seeing a need to do more bills, right?
Mm-hmm.
And she doesn't think that because she's worried, if I add more duration here, this auction might not go so well. That's certainly a reason to be worried, I would say. What do you think, Bobby?
Well, I think we've seen for a while now, let's call it 2 decades. I think that fits into a while, that the Fed is the driver of the market cycles, not necessarily the business cycles, right? So we're talking about 2 different things in a way, right? The business cycle, it cycles. It is what it is. I don't believe personally that it's avoidable. I don't even think they necessarily soft landing it or hard landing it. Either way, it's a cycle, right? And they operate on the margins of a business cycle that they can't control, in my opinion. But I will say that the market rally that we've seen, and when I say that, I'm obviously talking about equities, is based on this 125 basis points. I'm looking at the probability right now, and that's 25, 50, 75, 125. It looks like now it's a slight probability as you get further out. But by December of next year, now they have 150 as the highest probability priced in. Now,
how I get paid with the odds on my bet. Then.
Well, just think about it from that perspective. Granted, the probability of that extra 25 basis points that reaches 150 is 30.9%. Okay, it's not like it's 70% or anything. And those things shift. We see those things shift all the time because it's interest rate risk, right?
Yeah. But as a trader, you can make money that way, right? When you see being over.
And that's something you do, right? So when I look at that, I think to myself, at least over the last, God, I don't even want to put a date on it. And I said this to you yesterday, Jimmy. What Powell hasn't done things unless he said it first, and he hasn't said it yet. Now we go all the way back to Jackson Hole, where he basically said, "We love the kid in the background. We're good with it."
No doubt about it. More babies, the better, in our opinion. Yeah, we want to see the baby on the show. Can you?
Yeah,
bring it?
actually,
if you touch the camera, it'll mess it up, right?
We want to ask her a question.
I'm not touching the camera. Don't worry.
Okay, good. I don't want that.
But literally, from the perspective, go all the way back to Jackson Hole, when literally we would call that Jerome Powell's shaking of the market, where he's like, "I'm raising rates." Don't do that to the baby, by the way. But you have to listen because I'm raising rates, and he hasn't even come close to that yet.
Bobby, though his history is it's that way when he's hawkish. It's not as much that way when he's dovish. Oftentimes he talks hawkish right until the week before he flips hard to dovish. Emma, who's wrong or who's right here?
I mean, I think you're right, Jim. Yeah, and they all do, right? They all will go one way. We will not devalue, and then they devalue the next day. That's how you have. Like one politician put it this way in Europe. I forgot who it was. He said, "When things are falling apart and you're going to devalue, you have to lie. Like there's no choice." One second, let me get it.
Yeah, get it. We're not from New York. We like babies on the show. We're from Chicago. You can hold the baby. We're informal. This is good TV, in our opinion.
Good thing she knows how to hold the ball herself in a month.
It's awesome because she's your kid, so she's probably smart and athletic. So
The
you're both
overachiever.
Definitely athletic. Oh man, I did like an arm wrestle against her legs to see if I could still win, and I can still win. So that's good.
for now. Yeah.
For now.
So expand on that a little bit. So what you're saying basically, if the market or the economy, I should say, or the jobs figures get bad enough where they have to ease, they can still lie and then ease anyway. Is that what I'm
Sorry.
understanding?
I was thinking about baby.
What's that?
Can you say that again? I was thinking about the baby.
It's okay.
Staring blankly.
I guess what I'm asking is, you're saying that on the hawkish side, yes, but on the dovish side, he'll lie before he'll say things are bad, so we need to cut theoretically.
Yeah, I don't think he's going to give a forewarning to a cut.
So let me ask you then, where does unemployment have to be? Or second question. When I look at the JOLTS quit rate, for example, actually, let me switch it from unit labor costs and productivity. When you do like a regression analysis, like a 3-month annualize, those are still pricing out a year-over-year wage growth of somewhere in the range of 3 to 4%, which to me isn't consistent with 2% inflation. When you look at it from that perspective and you say, okay, they've been adamant about we're not going to adjust the target and we need the labor market to soften. Can the labor market stay where it is, or let's say stay below 4.2% on the unemployment rate and him cut?
I mean, I think that yes, it can happen. I think they make up reasons for doing what they do. Although I do believe there is some element of the labor numbers, but I also think Powell knows that these numbers aren't that accurate, and he does know to look at a trend. Like I think he's a fairly reasonable guy, and everybody's gonna hate me for this. That's fine. But you know, I think he's not like so much of a Yellen type. Your ivory tower academic knows nothing about.
Can I stop you, Emma? Because I have a question. When you think of Janet Yellen, do you think of a know-nothing who's just bumbled her way into different spots? Do you think of just so political that she's a political operative? What are your opinions of her?
The mixture of the not a know-nothing, but like actively know the wrong things, and a political being, a labor economist and a politician. Yeah.
It's the things you're sure of that just ain't so. That's what you're saying, right? Okay, but anyway, I didn't mean to interrupt. Yeah.
But so what was I saying? So I forgot where we were.
That's fine. So now, because I wanted to bridge it over to some assets anyway. We already talked about gold and Bitcoin. You look at the U.S. stock market right now. The U.S. stock market, Bobby said, all the market is moving on, in my opinion, is the recalibrated belief that the Fed is going to ease and money is going to be cheaper in the coming year. Is the stock market a good? Here's what I think. One of the reasons I'm much longer gold and Bitcoin than stocks for this trade is that stocks probably rally on that. Bitcoin and gold should rally for sure on that. There comes a time where the stocks might not like the fact that bad equals good and bad economy equals free money. What are your thoughts on the stock market?
I think that they're going to continue to like bad equals good. I think that but what they consider good being really good, actually like good news, or what we would consider the Powell saying is good news, which could happen next week. You could say something to bat that down. So in the short term, I think you could see Powell come out and you've seen how, except for today, how bonds have rallied insane, equities have rallied insane in a matter of a span of like a week or 10 days after he spoke. So he basically spoke and then they basically called his bluff. And so he may come out tomorrow and just be more hawkish sounding, even though he's not going to say we're going to raise rates, but he might suggest at it. Since Waller's speech, we've seen that run. And so the tightening, I mean, the loosening of the financial conditions, which he, by turning a little more dovish than before, was endorsing, if you will, has already done itself 5 times over. So if he wants to move it the other way, he's going to have to come out a little hawkish. So I would be looking at that as the next milestone. But then, I do think we'll have a year-end rally and rally into January, just because of structural, like not for any real fundamental reason, just because this is how like mechanical flows work. And then after that, we'll see what happens. I wouldn't expect it to continue.
Yeah, I agree with that. I mean, when looking in toward the year end, I don't see any real reason why it needs to turn around right now in order for things to be, for people to still think cautiously. And that's kind of what I've been telling people. I mean, I look at Q3 earnings, right? We had the largest cut to S&P 500 estimates over the first month of a quarter since the second quarter of 2020. That's according to FactSet. We have the smallest buyback numbers announced since about 2019, right? We have high wage growth. We're starting to see more layoffs. We saw a little batch of layoffs toward the beginning, middle of the year. Now we saw Spotify laying off 17% of its workforce. Now that could be a one-off, right? We're going to get Challenger, Grain, Christmas tomorrow. So the slowing is definitely happening. My question becomes, at what point, Americans are dumb in a lot of ways that because they got a raise, they think they're rich, right? They think they've got more to spend, despite the fact that they're catching up to where inflation was over the last year and a half. Now, if Jimmy's right that the supply chain is the biggest part of it, then that wage will stay in place. The supply chain will ride inflation, but services inflation is not falling, and it's 60% of the economy. So there's a question in here. It's not just a ramble. So I guess what I'm saying is, what are you most worried about, and what are you not most worried about? What matters and what doesn't matter? That's sort of out there in the conversation.
Oh man,
Yeah, baby.
what I'm most worried about. I mean, I'm not really worried because of the way that I position, the way that we position ourselves at Ascend. We position ourselves to be able to benefit from, outlier episodes on the downside, and we still benefit on the upside as well. But personally, the debt. I mean, just like Jim, the debt, the leadership, the nonsense identity politics, all this stuff that's just a waste of time and effort and brain power, when it just suggests a nation that's too rich, and people who have time to waste arguing about
that's a great
things
comment.
are just completely trivial.
So, I think you just said something that I want to clarify a little bit too. You said you're positioned for events to the downside too. You're just talking about taking advantage of incredibly cheap options right now to put on put packages that will explode on the downside, correct?
Yeah, we do that, but we do it with so we'll also try to take advantage of differences in gamma. So we'll sell. So say we've got a lot of people who buy downside protection with a 10% out of the money put, like big pensions and stuff. So those tend to be overpriced. So you might sell that and then buy a downside protection lower. So then when it does go lower, the gamma on your option that you own.
Yeah, that's what I do, like a 1x3. Like I'd sell the one that they were buying to buy 3, a couple ticks below it. But then I don't want to bring it up to expiration because I don't want to be caught in the middle and lose money. So you got to roll those. We've talked about it in these shows a lot of times before too. But I didn't mean to interrupt you. Bob, what do you got?
What percentage of the portfolio is managed by the baby?
Well, she manages me, so
all of it, basically all of it.
Just put it all in. I don't know. She said, put it all in. I was $1 futures and go to the beach. That's what I used.
So what do you think then the dominant narrative will be next year? And I don't care what the market is, right? So from any market, you think it's going to be the market being surprised by resilient rates? You think it's going to be more rate hikes? You think it's going to be a recession? What do you think?
I think the market's going to be surprised by Powell's willingness to continue to keep monetary conditions tighter. Then the markets are calling his bluff, but I don't think.
So I want to shot at that question too.
Go, Jimmy. Answer now.
So in the next 12 months, $8 trillion of the treasuries of our U.S. debt is going to need to be rolled over. Right now, the effective rate that they're paying on the $34 trillion in debt is about 3.4%. I might have that number a little bit wrong. I showed you that I got picked up by the Blaze and they ran my article where I had the actual numbers. But anyway, what I'm trying to make is they're rolling over that debt. At some point within 2024, I believe that the unsustainable debt that Emma mentioned before starts to exponentially affect itself. So they'll keep selling more and more bonds, driving rates up. More continues to expire and they have to roll it again and it'll go up again. I think there's going to be what could be a serious problem, and that's what I'm positioned for. Bobby, do you think that's reasonable?
I do, but I always go back to, it's the world's reserve currency and we print it. And that to me makes me worry more about the rest of the economy and the equity markets rather than the effect necessarily of that debt rollover.
Oh, and that's good because that's interesting something that you mentioned, because remember Brent Johnson was on it. And if Emma can hear what he said too, he said the problems we talk about are all very, very valid. But his point has always been is that every other country that matters in this world has worse problems than us. So realistically, the trade is to be short them, because if we're having a debt crisis, Europe's having a bigger one. You agree with that?
Because guess what? Everything relies in the end back on the U.S. consumer, strength of the U.S. consumer.
And
like everybody's gonna fall if the U.S. consumer falls. So there's a
Emma
lot
actually reached out to me, Jimmy, after Luke was on, Luke Roman, and she's like,
me and Brent versus Luke. It's like,
yeah, that's what she goes, have me and Brent versus Luke out here. I want to do this one.
Oh, so what was the big difference?
Luke
Luke was saying different than Brent?
Luke was talking about a debt crisis in the U.S. And
that's
Brent
what
and
we always
Luke
talk about.
yeah.
We've been talking about for the last 10 years. Although I haven't known him for 10 years, I can only expect.
But give me, okay, because I believe in a debt crisis too, but crisis is the wrong word. What's a lower term word? Like a kerfuffle? A debt mess? What's it going to be? It's not a crisis.
Yeah. I mean, I think your concern is legitimate. Well, I'm not going to say anything. I don't want to say anything, not fair.
Oh, well, Luke can take a punch. We love Luke, and so if he watches this too, if he doesn't mind being told he's wrong, Luke is a smart guy.
I told him he's wrong all the time on Twitter.
Good, yeah.
But that used to be a common thing. Me and Brent talking to Luke, but we kind of went our separate ways after just saying the same thing over and over.
Agree to disagree.
Let's tighten up my portfolio, because what I believe is going to be the debt mess. So I'm in anticipation of that. I'm long silver, gold, platinum, Bitcoin, real estate. That's what I believe is my hedge. What else should I be adding to that? Because again, and for people watching too, when we talk about a debt crisis, we're never going to default on our debt. We're always going to pay back. It's really just a currency crisis we're talking about. If we issue too much debt, our currency will suffer for it. It's never going to be like when they downgrade our debt, such a bullshit concept, because you're going to get paid. You just might get paid in cheaper dollars. But anyway, what else do I tighten up? If my thesis is that we are coming to a cliff, and the cliff might be 10 feet high, it might be 1,000 feet high. What's the best way to hedge myself?
Why don't you just do it in the rates market? If you think the Treasury is going to have to pay more.
Yeah, so I am long yields, short. I'm long the yield contract, so short bonds. Do you think and long duration? You think that's the way to do it too?
Yeah, that's the way to do it. I mean, are you sure you want to do that right now? Well, actually, no. Sorry, with the baby and trying to think. Right now, I would want to be short bonds as well, just given the way the market's priced. Powell wrong, in my opinion. But the markets are never wrong. But different than they'll find out he is.
So you think 10-year yields could screen back higher again for different reasons than I do, just because they've gauged Powell wrong, and higher for longer still is in effect, and 10-year yields may rally.
And not necessarily higher for longer, but not necessarily 150 basis points lower.
Yeah, that makes sense.
Higher than the market. Higher than the market thinks. We got a question.
Yeah, if he just holds through March, the market's going to make a huge adjustment, and that duration will pay. We
got a question for you, and then two things about this question, and then maybe we'll let you go take care of the baby so you don't have to stress about it. But Max is asking, now I don't know if you actually say you're a libertarian, but being a libertarian, do you think the events in Argentina's election will inspire people to re-examine our leadership a bit more closely?
Are we talking about our leadership, that is the U.S. leadership?
U.S. Yeah. U.S.
I wish it would. Do I think it will?
No.
Probably not.
I don't think so either. Do you identify as a libertarian? I shouldn't say.
It says so on her Twitter page. Yeah.
Yeah.
Every sensible person in finance that I know who tends to vote against Democrats, when you dig past the surface, is not necessarily a Republican. They're just a libertarian that believes in individual liberties. But you agree with that, right?
I agree.
Every time I talk to a sort of issue specifically, you find out they're more moderate, more moderately right than they are, center left or even left.
And God Almighty, the whole political thing, like Bobby and I are as liberal socialist people we know. We don't give a shit what you want to dress as or what you want to wear or what you want to call yourself. I'll fight for your rights to do it. I could mostly because I like a fight. So I don't like bullies. So
I don't like rules.
And I don't like rules, right? Exactly. So why don't we, Bobby? Why don't we let Emma go? Take care of that. By the way, what's the baby's name? I know you told me and I forgot.
Her name's Sandy.
Sandy's so pretty.
Yeah, so when she has a reservation, she'll use Sandra, but
Yes. And then she's older, use Sandra and her middle name when she behaves badly.
Holly, it's Holly because of you know why, right?
Why?
Florida, where I was when we did the last podcast.
Hollywood.
I was in Hollywood, Florida for the conference that was in just down the road. This was my Airbnb.
Sandy.
In the world.
That's
That's
spectacular.
fantastic.
Spectacular.
All right. Well, you go, Max, our producer. We're going to talk a little bit more about a couple of things that I want to hit, but thank you so much for being on. It's been awesome.
Thank you, Emma.
Thank you. Bye,
Bye,
guys.
Holly.
So, Bobby, I still need you to agree with me on something. We've disagreed on too many things lately. So, do you think 10-year yields higher? And if so, what's your thesis?
Do I think 10-year yields go higher?
Yeah.
Okay, so it's more of a duration conversation than that. I mean, I don't disagree with your thesis. Certainly don't disagree with your trade. I think because not only, okay, you mentioned yields going down. Okay, it was late October when we settled a 4.95 on the 10-year. Right. We've dropped 80 basis points since then, 78 basis points, something like that. That's stimulative, right? So I think the risk, not the likelihood, but the risk of inflation reemerging is worse than it was at the end of October.
And then either way, I'm right on my trade because then
Yes.
10-year yield. Yeah, okay, I get what you're saying.
Either way, you're right on your trade.
It's so funny. You go. Yeah.
No, it's okay. You guys have swayed me a little bit to why they would cut rates without saying something first. But I just think there's too much for them to explain. I'm not sure if I agree yet, but I think there's too much to explain away. Inflation won't be at 2% if they cut rates in March. Unless what's going to happen to drop it down from 3.5, 3.6 to 2%? And unemployment is not, although you've disagreed with this, it's not likely to be at 4.2, 4.3%, although it could be. But I don't find that possible with, let's take the jolts out of it because we both agree that the actual data, the way they source it is crap. But you just look at jobless claims. I mean, God, the quits rate dropped, but not much. Like people still think that they can quit and get another job at a higher level historically than we've seen in a while. So you guys are swaying me a little bit about my point that Powell has to say it before he does it. Maybe he doesn't.
Well, he has to say it maybe 20 minutes before he does it, is what I think too, because he wants to jawbone.
He's got to say it 11 days before he does it because he's got to be out of the quiet period.
Oh, the quiet. I forgot the quiet period.
Yeah.
Okay. What other asset you just kind of brushed on oil a little bit. I want to talk about oil real quickly before we go. You go.
I want to talk about that. So crude oil specifically. So Tradier does a rundown, right? It's an emailed newsletter to you guys. If you're not subscribing to it, you should be. And Jimmy and I always address it in the email and a video. And I was talking, Jimmy asked me about crude oil, which as everybody might know by now, crude oil and its derivatives are the thing I enjoy trading the most and the thing I study the most. I'm just interested in it. And I gave a whole thesis as to why I thought crude was going to bounce. And Jimmy said to me, and rightfully so you're looking to buy crude oil? I said, no, I'm looking to sell rallies. And that was, I think, November 29th. And since then, we've had a collapse. Now, this is not a pat on the back. This is one of those situations where if you go back, today is going to be the 8th straight session of lower crude oil prices in the WTI futures contract. We had not had 7 straight days since 2018. So 5 years. Now, this is 8 straight days. Now, if you go back to that October 2018 to Christmas Eve 2018, the entire move ended up being down 43%.
Jesus.
So I'm just saying, I'm not predicting that crude oil. So today it'll be down about 20% or so from the beginning of the 7-day, which is now an 8-day streak. I'm not saying crude oil has another 23%. I'm just saying crude oil trends. That's what it does as an asset class. So because we've had this conversation before, where I have been convinced by people who have shown me data. Okay, one of them was not Mike Farr, the other good-looking guy with the Art Hogan.
Yeah.
Art Hogan told me he did research and lower oil, subsequently lower gas prices is actually, let me flip that. Higher oil and higher gas prices are not inflationary because they eat away at discretionary spending, right? So now does this become slightly inflationary?
Yeah, particularly if it's going down because global demand, we're pricing in a global recession and global demand is going down, but domestic demand is still okay, meaning, so it's not reflexive of a huge slowdown here yet, which, I do believe there's a slowdown. And
Yeah.
I've made that argument too. I'm not as handsome as either Art Hogan or Michael Farr, who both look like they should be in some sort of older gentleman's fashion magazine, and I am jealous of them for that. But I do agree that crude oil going down could be a bit stimulative in this country and a bit inflationary. But again, I also think that the Fed's rate hikes haven't even really hit yet. So I think that we're still going to fall apart in the first quarter, and I know that I'm getting pushback from you on that.
Well, I don't know. I mean, I guess fall apart is the part I have a problem with. There's a slowdown, no doubt about it. And I don't believe in a soft landing. So I guess I tacitly have to agree with you, right? I just don't believe in 125, 150 basis points next year. I just don't see it.
Do you believe that Michael Farr and Art Hogan belong in gentlemen's fashion magazines?
I actually think they should belong in commercials for things they probably don't have a problem with.
It's funny. I know exactly what you mean. I thought you were going to actually say it.
I'm not going to say it. I'm saying they don't have a problem with those things. And it could be for retirement ads. You don't know what I'm talking about.
Reverse mortgages, maybe.
Reverse mortgages, Invisalign.
Nothing else than that. Right, of course.
I'm not saying what it is. So
what else do you want to talk about?
That is really all I had to cover. I don't have any individual names because I'm actually out of the markets virtually entirely in terms of individual names. I'm still long the Russell slightly. I do want to talk about that outperformance theory, though. And there's a little bit of that in the Tradier rundown, too, which you guys, if you don't subscribe, you should. Talking about how silver might outperform. And I think if I'm wrong and the Fed cuts rates aggressively, can the Russell catch up?
So I'm long the Russell, and I believe that is the case. Mm-hmm. I believe that, again, and I think that the huge rally in tech, which has been even during high rates, which the discounted future earnings model, whatever they use, it's supposed to not like it, and it's rallied that way anyway. I think it's a little top heavy, and I think that once we believe that the economy will get back going again through stimulation, I think that the Russell could do well. Which, by the way, when you talked about catch-up, I thought you were going to go back to gold and silver, which I still think is a more interesting trade. But I am long the Russell and short some tech, the QQQs against the Russell, but not as much. I'm much more long the Russell, hoping that catches up quicker.
The silver gold story is great. I got long gold last year, November. It was physical gold. Mm-hmm. Okay. And there are some ETFs, some are better than others. SLV, highest correlated to actual silver, lowest fee structure that I've found of the big ones. You've got GX Silver. It's a lower correlation, but a higher fee, although it can outperform. Same thing with ETFMG. Both of those hold a lot of miners, where SLV is more directly correlated to silver. So just to talk about how some people can get involved. But the beauty of that to me, since we should be looking at risk-adjusted things, is if you get long silver and the entire trade falls apart, that's likely because the Fed is not easing, and the silver has a little bit of a net because of its industrial component, right? That means the market's doing well, manufacturing is doing well, and silver gets a tiny bit of benefit from that. I don't even want to put a percentage on it, but if it does continue the upside, silver has a catch-up game to play. But you need to figure out that's good for you individually or not.
So what I'm going to do, my trade, is I'm waiting for gold futures to settle back above, call it 2120. That doesn't need to take out that high that it shot up to on December 3rd, but a good settlement above, let's call it 2120. And then I will look to be buying silver because gold fit my criteria for a gold rally, because I think the next move higher in gold, silver will outperform. Make sense?
Yeah, it does. The only reason I like gold better? If I get
because of pinky rings?
I carry those anyway, but if I get admitted into Congress someday, I can carry more gold coins in terms of value than I can silver coins. You can carry more gold coins around with you than you can silver.
So when you're getting paid off by people, you mean?
Yeah. So if I get into Congress and I can get some gold payoffs.
Sure, of course. By the way, are you referring to, doesn't the one guy supposedly they found a bunch of gold bars at his house or something? Who is that guy?
Menendez? No, of course not.
Of course we're not referring to him. But that was the story, right?
That Michael Farr and Art Hogan have anything to do with the commercials we're talking about.
Okay, good. I hope they watch this show just to know how much they've been talked about.
I'm having drinks with Michael next week, so I'll bring it up to him.
Good. I love Michael. He's such a good guy.
Yeah,
all right. Thank you guys very much for tuning in. We really appreciate it. I'm so sorry I had the technical difficulties at first. I hope I fixed them and righted the ship. I'm sorry that we couldn't get more of Emma's attention, but we all know how babies are. Well, most of us do in this.
Emma will be back.
Emma will be back.
She's a friend, and we're a fan of hers. She's a fan of ours. So she'll be
Thank you
back.
guys very much. Appreciate it. Talk to you soon.